Greetings, everyone. Let's talk about slightly different yet the same topic about investments, but from other perspective. Because, well, there are actually endless types of investments that one could make, ranging for exceptionally good to particularly bad. Well, if we talk about good investments, we might talk about investing in index funds, which is historically sound strategy, buying undervalued companies if you know how to evaluate companies and you have patience to wait out bad markets. You could follow trends like, but it's more like invest trading than investing strategy, but still historically this strategy has proven itself. You could be buying companies and then selling them publicly. Then this is like good strategy, but you have to have resources for that. Like you could own, I don't know, race horses if you understand something about that, because probably people have been making money on that if they own them, not if they bet on them. The realm is endless. Like you could go to art, to jewelries, to ancient books, to collection cars, and same horse breeding I just mentioned, but for breeding, not for racing. It you could go to real estate. You could, if you are prudent investor, you could buy commercial real estate. You could sell apartments, buy and sell and rent commercial real estate, apartments, agricultural land, forests, infrastructure objects, you name it. Most importantly, whether you know how what's your cost of capital, location, and how lucratively you could build it and sell it, so your returns on equity are making sense. So you could invest in private equity and in venture capital, and you get an idea. The list is endless. But what about bad investments? What about particularly bad ways to invest? Here also list is endless, and it certainly exceeds scope of this video, so I will give this short. I'll keep this short. Let's see just three bad places where you shouldn't invest. And these are three things: penny stocks, Ponzi schemes, and altcoins. So without further ado, let's start with penny stocks. I deliberately opened Wikipedia page because that, in my sense, would show the magnitude of frauds in this industry. Because if you have certain page dedicated to penny stocks and allegations of fraud in this sector, some questions might be risen. Like I wouldn't like read all the penny stock issues because it simply wouldn't be any interesting, because you could do that yourself. Just write penny stocks in Wikipedia or in Google and you would see plenty of answers. But the nutshell is simple. These are very low valued stocks, very low priced stocks, which are trading outside of large exchanges. And like, what's the lure of that? The idea is that it costs very cheaply, so you have presumption that it might rise in capital highly, like in several more times than you could get that for like highly established company. Because if company's stock price is $100, it shouldn't rise to 10,000, right? Well, that's the idea. But if something costs like 1 cent, it could go to like 20 cents in a couple of weeks and you could just make 20 times your money. That sounds in your mind more sensible. That's why people invest there. But does it work? Well, if you are lazy to read about this, just remember the famous movie Wolf of Wall Street, when there was like good replication of actual penny stock frauds exploited by Jordan Belfort, where he like used these same lures and like ideas that it's easy money because it's so cheap and they has huge upside potential with limited downside and whatnot to make money on that. But in case if you see how many data about known cases are there, if something is that particularly bad, so particularly obvious, should you invest there? Of course not. Well, I know by fact that I wouldn't make difference in human nature, because there will be people who will invest there. But I think it's my responsibility to tell you that you shouldn't do it. This is outright fraud. And in 99 times out of 10, you will be much better off if you would ignore this asset class. Same goes with Ponzi schemes. Like Ponzi's, if penny stocks are something more specifically defined, like these are stocks which are traded on non-regulated exchanges, which are traded for extremely low costs. Ponzi schemes might be more broader because it would well involve a lot of multi-level marketing companies and a lot of business transactions, which wouldn't look as complete frauds on the surface because this dude Charles Ponzi, when he made his Ponzi scheme, it sort of looked like legitimate business project at face value. So there is like risks. Like of course also you could go into Wikipedia and read about Ponzi schemes because I wouldn't like reread all of that what I am selling telling you here because it wouldn't be interesting. You could see like high returns with little risk, overly consistent results, unregistered investments, unlicensed sellers, secretive or complex strategies, issues with paperwork, difficulty receiving payments. You know the drill. And also about sales personnel, sales tactics, about how visible are and how transparent are the products and things like that. So, how you could know that in the first hand without these extremely complicated concepts? Well, if something is or someone is offering you products which gives you consistent profit from phone or from anonymous account of social media run, this is like the first thing. Second thing is that they have very also dubious sales practices or practices where you should involve other people to sell that product. Well, this is like MLM, but Ponzi schemes and MLMs are overlapping in some cases, but still, like as it's written here, good promises, consistent results, something complex or important, like someone from Shell is ringing you or writing you and saying that he has like limited discount on its shares, so you could grab your wallet and invest with them. This is the fraud. Like this is example, or someone is making ads that Tesla is making some limited offers, something similar to that, or like I don't know, some friend of yours says that you could double your money every week because he has that lucrative business idea with government. Things like that. I just couldn't get finger to specific things because there are so many of them. But I think every one of us in our lives has seen examples of that. But we have very little time, and let's cover very briefly the third asset class, which is altcoins. And what's the problem with altcoins? Well, this is similar as the penny stocks. They are priced very cheaply, and then people perceive that they could be next bitcoins because Bitcoin costs like tens of thousands of dollars. But if altcoin costs cents, you would buy them and you could get like the same return, but now you could get early, like in 2010 with Bitcoin. That is the premises of altcoins. And then we could make any kinds of ideas, which is like the best altcoins from DeFi category, NFTs, net metaverse, or whatever. We could see these kinds of altcoins and think, yes, one of them has best project, I will buy it, and then the price will go up as high as it did with Bitcoin. But let's check it. I don't know why it's so laggy this page, but here's one example of do a couple of things. You could Here's the thing. Absolute majority of altcoins are failing. So you have like 99.99% of altcoins which doesn't have any realistic value and returns, and they're going nowhere. And if you want to think that you are the 1% or 0.1% who got this right, you are buying the bait that's sold by people who are creating these altcoins. And in fact, the only way how you could make money with altcoins is selling the altcoins, not buying them. You are in the wrong side of equation if you are buying simply altcoins out of exchange.